So let's see if we can choose a direction here. This has been the same story. We'll open, we'll trade either off our high tide, low tide, but we'll be around our mean, and then we'll choose the direction. So either closing above middle VWAP and we start trending higher, or closing below middle VWAP and we start trending lower. We'd trend lower on our low tide or trend higher on our high tide. Still balanced, but decent amount of volume here. You can see, I don't love how these overlap. But if we put MACD on the price side, let's do this lower. So, a lot of volume relative to our pre-market session. Got a little bit close there, right into the open. Now we're starting to open up. Speeds are increasing a little bit here. And again, I was talking about how I don't use MACD to trade, right? Like solely. I'm using it, like I'm not using MACD cross or probably those like very common ways you've seen MACD being traded. I really just use it. It's kind of like a reference point to where we're at. And I know a lot of people do look at MACD, but if I look at whatever asset I'm trading, maybe it's just looking at SPY right now or the specific ticker that I'm trading, I'm typically going to look at MACD because I want to understand really the relationship between volume. Okay, so we've got our volume here. So look at that. Look at our volume picking up. 327,000, 329,000, 337,000, 340,000. Look how much volume is dumping into the market right now. So I want to understand, okay, what is volume? What is volume in that given, for example, we're on a 10-minute time frame right now, right? What is volume on that 10-minute time frame, or 5 or 1? And then relative to volume, if I look at our MACD, moving average convergence divergence, that's what MACD stands for, we can, without having, specific MAs pulled up, we can have an idea where our MAs are relative to each other, because as price increases, so as more people get involved, therefore as volume increases, right, our moving averages are going to typically trend further apart. They're going to diverge, right? So when we see that whatever asset we're trading starts moving fast, the MACD is just going to go like this, and it's going to get further and further apart. So you'll see the lines are together, they'll trend apart, further apart, and that distance that they make between each other, right, this is the distance, that lets you know, okay, the market or the speed at which trading is being done has increased, right? There's more people getting involved in this move. We're either pushing up or pushing down based off of red or green. And then you could see how it starts to flatten out when we're ready to switch direction. So some people use it as a way to, let's say, trade a directional bias, as in we get MACD cross to the upside. That would, signify longs, or cross to the downside. That would signify shorts. Whereas sometimes it does line up with my entries. The crosses, typically they're a bit like delayed, like lagged. And definitely for a lot of the time exits, when the market does turn around, cross is going to be pretty delayed if you line it up to where the actual bottom was, or top, right? Long or short. It's going to be a little bit behind. But I'm looking right now and I'm like, okay, this amount of volume here that just poured in off the open, and we're pushing pretty hard on SPY. We're up over 0.5%. Well, here's the thing. This amount of volume has not even put us over our speeds during pre-market, right? So keep that in mind. Right now, we are making less headway on more volume, right? So this was very little volume relative to our open. And look at, when we look at our bars, you can call these bars, right? Look how high these are. Okay, so like 0.25 was our highest bar on the MACD at 840. Now look at this one. 940, we're at 0.20. Okay, so speeds were much faster. The market was moving much more on less volume versus off the open. We have so much more volume and the speeds are not as fast here. And you can just see because our two lines here are much closer to each other compared to before. This lets us know how much more really is in the move. And I always talk about like true high, true low, false high, false low when we use our envelope system, right? It's kind of the same ideology where it's like, how much more do we have here? Are the buyers getting exhausted? Are the sellers getting exhausted? Do we have a ton of buyers, but we're just not pushing up? What does that mean, right? And so we can kind of interpret that. But here, like we could see, we just traded up to reds. Now we're testing reds. Didn't quite get down to reds here. We look at pre-market. Broke reds, got close to green. Aftermarket, right? It wasn't since yesterday. Yesterday we were on reds once. I guess that's 1, 2, 3. 3 times we touched reds yesterday. Okay, pre-market. I guess 2 there, 1, 4. Already at 4. So we're definitely looking much stronger this morning, at least to the upside, right? If we were looking at SPY, just SPY alone. SPY does look much stronger, right, relative to yesterday, just knowing that our bars are trading on higher bands. But we're still balanced, so we're going to just trade around our mean here. And right now we're sticky above middle VWAP, but our VWAP is like pretty tight. Right? Now let's see if the software sent us anything. We've had a couple orders. Nothing has matched our filters. Why do I have music playing? I hope that music wasn't playing the whole time. That was just for me. Just the Discord music. Yeah, let's see. Yeah, a couple orders here. Nothing matching our filters. So Friday's typically second highest volume day to Monday, right? Look at that. Pushing. So the market's looking very strong this morning. This is funny. So I was messing around with the look and feel on Thinkorswim. Ready? I don't know why this is so funny for me, but it's pretty funny. Ready? You guys think I should start streaming like this? What do we think about light mode on Thinkorswim? No, we don't like that. You don't think it's easier to read our VWAP? It's like almost making me like seasick looking at it. I don't know why. Okay, we're trading on blues. Oh my god, it's terrible. That's really, really hard to look at, isn't it? Ugh. Getting sick looking at that. Awful. 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 Old school Thinkorswim is not as bad. It's a little bit more colorful. Oh, terrible. Yeah, can you imagine? That was like most trading platforms back in the day. I mean, even like early 2000s were light mode. Terrible. And then this one kind of just messes with the colors. We'll just go back to dark here. That's better. Yeah, the white background is just awful. we're starting to trade above red here. Pushing our top VWAP. Whoops. Getting a little closer. Let's see if we can break. What would it be? 25, 20, so 26 on MACD. We're at 23. Yeah, I won't be using light mode. That was just for fun. Don't worry. So we've got Monday, Tuesday, and then that's it for this month, right? Wow, this month went by fast. Yeah, Monday, Tuesday. Should be able to close this month, hopefully in the green, right? And relatively, I mean, September is normally a red month for the overall market. I think everyone knows that, right? And it doesn't mean that our performance is going to be correlated to the overall market. Last year was a red month in September. It was like pretty much the only red month of last year. And so seeing that we are green right now this month is great, right? That's good news. It's not like it's been a huge month, but still a green month. And again, you always got to be prepared for the occasional red month. It's going to happen. I've gone a couple months actually where I didn't make anything, and so it is hard, but it's going to happen at times. And you just got to make sure you're positioned well to be able to take a couple red months and have that really not affect you too much. If anyone tells you they never have red months trading, they're probably not trading. Right? I think it's just inevitable. Long-term investing, whatever you trade or invest in, there's going to be red. We were talking yesterday how S&P was down over 15% this year, right? So your long-term safe, quote-unquote, safe investment, putting your money in the S&P 500, you would have lost 15% of your account plus. And now we're only up I think now just over 10%. So this year you would have actually been at risk more. You would have lost more than you would have even had the opportunity to make. Isn't that crazy? Yeah, we're up around 13% on the year. So still, you still would have lost more than you would even have made this year, than you'd be up right now. And you would have had a couple red months, right? I forget. Well, obviously April was very red. It was a pretty quick recovery, but still. So again, we were talking about this yesterday. You talk about year-to-date returns. It's going to be dependent on three main things: account size, position size, and risk management. And when I say that, it's how are you managing risk on? Are you scaling your account? Are you compounding your returns? Are you trading fixed size? Right. So it's going to be different for everyone. If you start out the year with X amount in your account, your position size is 5%. You are trading that fixed 5% size. Your year-to-date return is going to be different than if you started the year with 20,000 at 7.5% per position, and you're compounding your returns per trade. Or let's say you started out the year at 5,000, you're trading 2% size, and you're compounding your returns daily, right? And if you're new, by the way, we don't necessarily take a trade every morning during the live session. Trades move fast in the morning, and so that's why I am on the live stream here, so we can catch trades fast and we can get in on those moves fast while things are moving fast. That's really the first 30 minutes of market open. And then volume typically starts to die down, and you can even see that now. Like volume was pretty high off the open. Second 10 minutes, a bit lower. Third 10 minutes, look at that. So volume dies down. These contracts we're trading on whatever stock are gonna just be less volatile. They're gonna move less. So it allows me to have a little extra time to actually type up that call out and send it out via text in the call out section. So after 10 o'clock when we hop off, sometimes it runs a little over. Like yesterday we were on until 11:15, but I'll end up sending that message in the trading callouts. About like, let's see, this morning, if I look on the software, we've had 10 trades hit the software, and again, none have hit the specific criteria that I look to trade. So that's why we're kind of just watching the market, always making sure that we're in sync and in tune and in step with what's really going on, right? Average, we're taking 3 to 5 trades a day. But again, some days are going to be much slower. Granted, like Wednesday is always very slow. So you just want to understand your volume trend or volume pattern of trades taken during the week. Like Monday, I couldn't, I have limited time flexibility. I can't do much on Monday because some Mondays I'll take plus 10 trades. So, but Wednesdays, like, I pretty much have the day off. And it's funny because this is like another thing we were talking about yesterday. Oh my God, I need coffee. Yesterday we were saying that it's funny when you have a trading system. We were talking about the systematic trading systems where you're showing up and you're following a system, and like you have these predefined rules. And then we were talking, on the other hand, if you show up and you're making your own decisions, right, and you're kind of just looking at the market and reacting to what's happening at that second, you're not coming in, you're not following a system that's predicting for you what might potentially happen. Instead, you're coming in and you're trying to react to what's happening in that given moment. And there are a couple different words you can use to describe like what type of trading that is, but just generally, like most days I show up and with trading, you got to be on top of your game every day, unless you have a system that you follow that has, like I said, really defined rules. And then you kind of just got to show up as like the quote unquote operator and place the trades, enter and exit as the system shows you. So like today, you show up non-caffeinated, maybe a little tired. It's not a huge deal because it's just like, okay, let's wait for the software to send us something. Whereas if I was, here trying to actively put on a bunch of trades right now and coming in, like, what do I trade? What do I look at? What direction do I bet on it going? How do I manage the trade? You gotta be on your game. So I just sit here a lot of the days and I'm kind of bored, Well, I got the warehouse, which is great because I just hang out here and I've got a gym, so I'll just walk over and just like work out whenever. Occasionally just walk over and lift for a couple of minutes and then walk back and sit here. And there's a bunch of other stuff I got here, but kind of just a good hangout spot for me because I really don't know what to do some days. I just have to find a way to be near my computer, right? That's kind of the thing, is I have to be near my computer because I don't want to jeopardize managing trades, getting out at the right time, missing an exit, missing an entry, being late on the entry if I'm, maybe on my phone or somewhere without service. Not that I do go out. I typically will just take my computer, but it's kind of a boring approach to trading the way I trade. It's not super exciting, and I don't think trading has to be super exciting. I think the more you do it, it gets less exciting, and if it's exciting for you, and I'm not saying you don't have to enjoy it or you can't enjoy it. I enjoy this, right? I show up here every day. I look forward to getting on these calls and having my coffee and watching the market. And at the same time, it's kind of boring, right? If you're trying to get adrenaline out of trading, you're doing it for the wrong reasons. This is not gambling. This is not a casino. It'll probably feel like that when you start out, and eventually you'll kind of realize that it's not that. And if, like I said, if it is that, I mean, you're probably not doing well, for one. I don't know anyone who shows up, who's been trading for years and years, and is like, let's go gamble today. And you know, you get that adrenaline from gambling. I mean, inevitably there's inevitable dopamine through trading, because you make money, you lose money. It's a lot, right? And I always say, like, if I stop trading ever, I'm going to be like, it's going to be weird, right? Because I'm so used to that dopamine throughout the day trading. Look at that. We're kind of flattening out here on reds. Not much volume at all. We're getting pretty close here to going vertical. But yeah, it's definitely, it's a cool job. It's a fun job, but you got to realize, like, what you're in it for. You got to be in it for the right things. I think most people would prefer to be their own boss, right? Work for themselves, wake up, not have to put on a suit and tie and go to work. I mean, to be able to just wake up and hang out at your house or your warehouse and just do your own thing, be your own boss, and just sit on your computer. It's a pretty good job. Play some video games. Like, I got a Nintendo Switch because I'm like, you know, maybe I should get back into playing games once in a while if I'm sitting here watching the charts. So I did. So I'll wake up and look at the market and play a little Switch and